Hi and welcome to The Money Factor. My name is Ian Varley, CEO of Eagle Business Credit. And on today's episode, we're going to be talking about purchase order finance. Specifically, what is purchase order finance, who can qualify for it, and what are the benefits. That's today on The Money Factor. I have with me today Angela Reece, my Head of Operations. Angela, thank you for joining me.
Thank you for having me.
Purchase order finance is always a great topic. I think it's confusing for some people, so I'm glad we're going to spend a few minutes going through all of that. Perhaps we can start. I think it would be helpful for our viewers to know exactly what is purchase order finance.
So purchase order finance is a mechanism that will be able to provide you with the working capital that you might need in order to bring in finished goods and have it delivered to your customer. When I say finished good, I mean a completely finished product. So you're buying the product somewhere from overseas or somewhere in the States, and they're putting together that product or making that product and shipping it directly to you, or maybe in some cases directly to your customer, and that is considered a finished product. PO funding aspect comes into play whenever you have an actual order for those goods. You would submit those orders to your supplier and get your quotes and pricing and shipping. And in order to pay for those goods, you could use purchase order funding in order to do that.
Yep, I think that's it in a nutshell. And I think the key point is finished goods. So we have a lot of people that call us up and say, hey, I've got an order from my customer, and maybe it's for services. They've got to go in and do some maintenance or something like that. They're looking for funding. Obviously, purchase order finance is not going to be a fit in that scenario. You have to be buying finished goods from a manufacturer. And that's when we can come in and provide you with the working capital to help you get those goods. We see a lot of people call us up that are in need for additional financing over and above either a bank facility or a factoring facility if they have it in place. And PO finance can be a real extra injection of cash. But I think that confusion does arise when sometimes they have an order and they think, hey, can you just give me the money for that? It doesn't really work like that, does it?
It doesn't, because there are qualifications related to that order. So, we're only going to provide up to maybe 70% funding against that purchase order. So you want to make sure that your margins that you have in that deal are going to be adequate to cover that. Otherwise, there could be a deposit that's required in order for that funding to work for you. It's not we're not saying that you can't do that, but it would be a little more challenging in order for us to do that. It would be a little more challenging.
And the real key is that we're not providing the money to the client. We're actually funding the supplier. So we're going to pay the supplier directly, as Angela mentioned, in order to get those goods shipped for you. So it is a very transactional and therefore sometimes confusing type of finance. So think about it this way. You're importing goods or you're getting them from a domestic manufacturer, it doesn't matter. But you need that manufacturer to be paid for those goods. You don't have terms with them. Or if you do have terms, they're very tight and you don't have enough working capital in order to get the order from that manufacturer. That's really the key to it when PO finance can come in and help. Let's talk about the type of companies that we see. I mean, we've done a lot of PO finance deals over the years. Types of companies that would benefit. I'm thinking, obviously, fast growth. We've seen some of that, right?
Yes, in some cases, it could even be a startup company that has this wonderful idea, of a product that they want to manufacture and ship out to their customers, and we can do that. But the things you want to look for, is there a need for that product? What are the terms with the customer? Are there sell and return type terms, if you will, in the purchase order? Meaning, if they don't sell it, can they return the product? And how does that impact you? Are the goods branded? Meaning, does it have the company's logo on them? Because if they are branded and something goes wrong in the transaction, then you may not be able to get the PO funding you need for that. The PO funding is good for small businesses who have product that is a finished product and shipping it to the customers wherever they may be. And it could be a manufacturer putting together a lot of different components into one final product. It could be just one product all together that they're compiling for
Right.
you.
The key is that they're growing fast. These businesses
Yes.
typically that are looking for PO finance are growing fast. Their cash flow isn't keeping pace with the orders. So they've got a great product, they're getting it manufactured, but they cannot keep pace with sales and the need for funding. And that's where PO finance really can be that additional injection of cash. And it doesn't matter if they're a startup business. It doesn't matter if they're growing fast and maybe their balance sheet isn't, strong enough yet. Because PO finance is a very transactional form of finance, as you can see, Angela's going to look into the details of exactly the product, where it's being made, how it's being shipped, what the margin is in that transaction. And that's what we're going to finance for you. So we're going to help you get the money together to pay the supplier for the goods so that you can meet that purchase order and continue on that strong growth pattern.
And as Ian was saying, if it is a product that is continuous and you're making those goods every single month, this can be a mechanism to help bridge that gap and keep that flow smooth, so you don't have any delays in shipments to your customers, because customers aren't going to like that. So you want to be able to ensure that you have the funds available to make sure that those shipments continue with no delays.
Yeah. And because it's transactional, you don't have to finance each and every purchase order through us. You will need to be a factoring client. So the way that we're going to get repaid on the purchase order advances that we make is going to be through the receivable funding that we can also do for you. So PO Finance is a top-up facility, an additional facility over and above the receivables line of credit that you can obtain from Eagle. And because it's transactional, like I said, you don't have to finance each PO. You can pick and choose, maybe the larger ones, maybe that makes sense for you, or certain manufacturers where you don't have terms, other manufacturers you do. You can obviously finance the POs through the ones that don't give you terms. So there's flexibility there as well. So hopefully that gives you a flavour of exactly what it is. We've talked about then who could benefit from it. Let's talk about how you can qualify for PO Finance.
So in order to qualify for PO Finance, you want to have an order from a well-known customer, someone who's going to pay you properly. And you want to make sure that you have good payment terms with your customer set up. So generally you want to look at net 30 terms. That's the best out there. You don't want to try to extend those terms out there. Otherwise it could be a very expensive funding for you if you had to add PO funding on top of funding the receivable debt in the end. But when you look for your suppliers, you want to make sure you negotiate good terms with your suppliers as well. Some suppliers will require funds up front in order to start production of those goods, and while that is common, you can negotiate different things where you pay for the goods after inspection before they ship out. You make the payment upon presentation of all of the inspection document and the bill of lading, and that just protects you to make sure that what you're paying for is what you're getting, so that when you do get the goods, you haven't already paid for something that you can no longer sell to your customer. So just making sure that you have the right terms with both your supplier and your customer will benefit you in the transaction, because you want the funds to be out in a short amount of time as possible.
As you can see, Angela has a wealth of knowledge and experience, and as ever, if you're not sure, we invite you to contact us. Give us a call. We'll happily talk through your scenario. If you're interested in purchase order finance, we can look and see if you are going to be a good fit. Ultimately, if you are selling to commercial customers and you have a physical product and you're growing and you need cash flow support, then typically PO Finance and receivables finance will be a good fit for you. You don't have to have impressive personal credit. You don't have to have a strong balance sheet. You do have to be in business. You do have to have customers and orders and sales. That's all that we need in order to try and see, will our solution work for you? We're going to advise you. We're going to ask you good questions about the transactions. As you can see, Angela's going to go into the detail to make sure that it's going to be a good fit. And if it doesn't fit, we'll be very upfront and maybe recommend some alternatives for you. So definitely think about it. If you're interested in purchase order finance, Angela, thank you for your time this morning. If you have any questions, you can reach out to myself, Ian Varley, or Angela Reece as my head of ops, as I mentioned. And thanks again for watching The Money Factor.
Thank you.